Good morning and good afternoon, everyone, and a very warm welcome to the Impact webinar from Sustainability to Security Investing in SAF. My name is Richie Guo, content producer at Leaders Associates, and it is my pleasure to be your host for today's session. The sustainable aviation fuel industry has reached a pivotal turning point. What was once viewed as primarily as decarbonization tool is now understood as a matter of energy security, industrial resilience, and long-term competitiveness. With spending mandates moving into implication, Refuel EU, the UK SAF mandate, Singapore's SAF levy, the conversation has shifted decisively from why SAF to how do we scale rapidly, efficiently, and collectively. Today's webinar cuts through the headlines to tackle the practicalities of the 2030 transition. We will hear perspectives on the sovereign mandate for security, the national roadmap for building a domestic SAF industry, and the buyer's commitment that turns offtake agreements into final investment decisions. We will then bring the themes together in an executive panel focused squarely on driving capital resilience and promoting 2030 readiness. We're joined by a distinguished group of speakers from the Air Transport Action Group, Royal Schiphol Group, International Airlines Group, Sustainable Aviation, ICAO, LanzaTech, and the Sustainable Aviation Buyers Alliance. I encourage you to stay engaged throughout the program and to submit your questions in the Q&A box. We will address as many as possible. Your questions will help shape our continued engagement with the SAF community. Please also note that this webinar is part of the Impact Virtual Content series leading up to the SAF Global Summit 2026, which will take place on 22 to 23 September 2026 in London. At the world's leading event for advancing sustainable aviation fuels, SAF Global Summit 2026 will bring together over 1,000 senior executives from across entire value chain, policymakers, energy leaders, producers, investors, airlines, and OEMs to transform ambitious targets into meaningful progress. Focused on policy, strategic investment, scaled production, supply chain logistics, and innovative technologies, the summit is where the blueprint for 2030 and beyond will be written. We invite you to join this critical conversation in London this September. To open our program, it is a pleasure to welcome Mr. Haldane Dodd, Executive Director of the Air Transport Action Group. Haldane represents the full global aviation ecosystem at the highest levels of international policy. This morning, he will set the stage by shifting our lens from sustainability as a goal to security as an imperative. This morning, Haldane will reframe SAF not just as sustainability, but as an energy security. His keynote is titled Sovereign Mandate for Security, Policy Certainty Promotes SAF Development. Haldane, the floor is yours.
Excellent. Thank you very much. Let me just get my slides up. Hopefully you can see that now. So yes, good morning and greetings from a very wet Leipzig in Germany, where I've been meeting at the International Transport Forum Summit, which takes place every year here, bringing together a whole range of different ministers of transport from countries all across the OECD and a bit beyond that as well, talking about a whole range of different issues. This year's theme, even though it was decided last year, is resilience. And of course, it couldn't be more timely to talk about that. And so there's been a lot of discussions around resilience of energy supply, as well as other areas of resilience and climate adaptation as well. So it's a really interesting discussions here. What I've heard both here and also in the last few months is this discussion around what the acronym SAF stands for. And so, of course, for us, it's always meant sustainable aviation fuel, and that's its official designation, if you like. But I heard yesterday sovereign aviation fuel, We've heard synthetic aviation fuel, and also, of course, secure aviation fuel as well. And that security of supply and security of sort of access to energy as well is a really key part of the way that we're starting to think a little bit more about SAF being not just a sustainability story, but a wider security of supply story as well. And certainly the current situation is really bringing that front in mind. But actually, a lot of the issues that we're seeing now come from a whole range of different decisions that have been made over the last couple of decades, let's say. And so I'm going to take you through some of the thinking that we've had within the Air Transport Action Group on this issue over recent months and weeks. As well as we start talking about it, and the energy discussion more broadly than just the sustainability one. And so one of the things I wanted to highlight here was just how concentrated our traditional energy supply has been, not only when it comes to the sources of fossil fuel, which is about 22 countries in the world supplying 90% of fossil fuel, and that's been the case for many, many years. And of course, there are some of those states that really provide a bulk of that 90% in their own right. There's a huge tail here, so a lot of countries actually provide some level of fossil fuel, but at very small levels. But of course, the bulk of that comes from those 22 countries. But not only in terms of the raw crude oil product itself, but also in terms of refining capacity. And this has really been a story that's developed over the last 10, 15 or so years. You see on the slide here the red dots representing refineries that have closed down in the last 10 years. And the green dots show how actually there's more and more mega refineries. So these are refineries that have over 500,000 barrels of oil being processed a day. And they are concentrated in certain parts of the world. What surprised me looking at this was just how much refining capacity there is in South Korea, for example. And of course, South Korea doesn't have a fossil fuel production industry from a crude oil perspective, but it's a major refining hub. And so that's shown that the actual concentration of refining capacity has really developed over time and has constrained some of the supply to the world as well. Now, jet fuel has its own particular challenge. Before we were showing a slide which really represented crude oil and the full sort of suite of products that you get out of a barrel of oil. But jet fuel is actually a fairly small part of the barrel mix. At the moment, about 8% of the barrel of oil is turned into jet fuel. That fluctuates a little bit, but not all that much. 6 or 7%, maybe 9% or so. And if you really squeezed it, potentially we could get up to maybe 15 or so percent of the barrel of oil. But the more that you try and refine that, the harder that refining becomes and the costlier it becomes as well. And so that's why in general, under 10% of the liquid fuel use in the world is jet fuel. So that's one part of the longer term discussion as well. And then the cost question also comes into it. And you'll see on the right-hand side of the screen here, the last 3 years showing the jet fuel price, the global average in the red bar, and the traditional oil price, the price of Brent crude in the blue bar. And the split between them, the crack split, shows how jet fuel is more costly to refine. It's a more costly product. And at times of crisis, like we're seeing right now in the last month or so, actually that crack split spreads even further. And so it costs even more for us to get jet fuel than the wider energy shock that we're seeing at the moment. So oil generally is up about 50% in terms of cost. Jet fuel is up over 100%. So as these crises start to develop, it costs even more for us to get jet fuel supplied into the market. And then, of course, some of the refined product is manufactured in the Middle East and has to go through the Strait of Hormuz, and we're starting to see discussions around potential shortages of jet fuel in markets all across the world, but most keenly here in Europe, where about 30% of the jet fuel traditionally has come from the Middle East through the Strait of Hormuz, and that's really being squeezed now. So we're already starting to see airlines thin out their route structures, thin out operations in anticipation of trying to make that jet fuel last even longer. But this is a story that is also being felt in other parts of the world as well. What this chart here shows is really just the refined jet fuel production coming out of the Middle East. What it doesn't include is, as we saw before, South Korea, Singapore, refining a lot of crude into jet fuel, and a lot of that crude itself comes from the Middle East as well. So the picture is even more important than what we're seeing on this slide here. And then in a longer term sense, we're also starting to see a real shift in other users of fossil fuel as well. So I've chosen just two sectors here, automobiles and electricity. And we're starting to see more and more sales of electric vehicles. Last year, about a quarter of all vehicle sales worldwide were electric vehicles. But you can see in Europe, it's over 60%. In China, it's over 50% now. And in Norway, places like Norway have 95% electric cars as part of their sales mix. So that's showing a systematic change over time. And I'm sure these numbers, particularly during this crisis, are going to increase even further. That's not a shift that's coming back anytime soon. On the electricity side, interestingly, last year, for the first time since 1919, the amount of electricity that was generated from renewable sources was higher than the amount of electricity generated from coal. And again, this is something that is shifting in a systematic and fundamental way. It's interesting to show that the entire growth of electricity supply in both India and China last year was met through renewable electricity, not through fossil fuel electricity as well. So how does this relate to aviation? Of course, as we see this move forward, more and more of the energy system is shifting away from fossil fuels, which leaves us as a particularly vulnerable sector in many ways. So we're reliant on one source of energy at the moment, generally, from a small number of countries and, of course, a small number of refineries, with, of course, price and supply volatility, a coming systematic reduction in other users of fossil fuels, and, of course, a large CO2 footprint. And that's really where a lot of the work that we've done traditionally on SAF has come from. We know that we have improved our efficiency over time. A flight that you take today produces less than half the CO2 emissions than the same flight would have 30 years ago. We need that to continue, of course, so that we're using less energy product. But it does require us to think about a whole range of new ideas, including new technologies and new operational improvements to bring ourselves down from potentially 2.4 gigatons of CO2 in 2050 if we keep using today's level of technology and today's level of fuel efficiency down to net zero CO2 emissions, so that we can live up to our climate commitments as an industry and play our role in the global climate shift as well. But we know that most of that shift will come through changing to sustainable aviation fuels, SAF, and of course that's fundamental, biggest lever that we can pull, particularly out till 2050. Maybe not beyond that, but certainly until 2050, we're going to have to rely on SAF to get there. We know there are some really interesting technology developments in the commuter and the regional space. And this is a chart from our updated Waypoint 2050 analysis, which came out in February this year. But what this really does show is SAF is core to the climate commitments that we're going to meet, particularly in the medium and long haul segment out to 2050 and beyond, but in the short haul segment as well, until at least 2040 or so as well. So my key question is, how do we get from today's level of SAF, which is about 2 million tons of SAF being delivered last year, through to 2030 and the current commitments that a lot of governments have in place through blend mandates, through the ICAO CAF3 discussion, is for around about 20 million tons to be delivered in 2030. I'm less worried about that. What I'm really concerned about is how do we move from 2030 to potentially 500 million tons being delivered every year by 2050 to meet those climate obligations. That's the greatest challenge that we're going to face for our future as a sector, not just when it comes to sustainability, of course, as we were saying before, to do with energy security more broadly. And I think that that's a really important thing. What it shows is diversification, a diversification of supply, both in terms of geography, moving from 22 countries delivering nearly all of our fuel to potentially maybe 150 countries having some role to play in SAF around the world. So it's a geographic diversification, a democratization of energy almost, but also just in terms of the inputs into the energy process. So from one source of energy that we've got today predominantly, apart from a very small amount of SAF, to potentially a whole variety of different sources that can maybe rebalance a little of that energy supply. And of course, we're starting to see more and more governments around the world put in place policies, either adopted or starting to really have important discussions around that. And so, yeah, we've got about 45 countries in the world that cover about 65% of the aviation activity. Adding all those up gets you to that 20 million tons of SAF that will be required by 2030 that I referenced in the previous slide. So that's really great to see. We're going to need to see more of that come through, both support on the demand side, but importantly support on the supply side as well. And hopefully the other speakers that will be talking today will be able to fill in some of the gaps of what can be really useful in that sense as well. So I mentioned before that we had our Waypoint 2050 report. The new analysis came out in February this year, and the three key messages that we wanted coming out of that were that net zero carbon for aviation is an important and ambitious goal. It's important that we play our role in that global climate commitment. It's challenging for aviation particularly, but it's still within reach if action is taken now. The next 5 years are critical to ensure that air transport is on course to decarbonize. And importantly, this is a collective effort. It's going to require inputs from governments, from the energy sector, from the finance community, and also for us to, in aviation, really pull out all the stops that we can as well. But of course, the discussion's not just around decarbonisation. If we're shifting to SAF and we're thinking about energy more wholesomely, it can also support energy diversity. It can supply a balance to the logistics and security of the system, ensure that we have a balance in the cost dynamics as well, create economic opportunity, and support green energy jobs and opportunities in countries all across the world. And that's a key thing. If we're going to make sure that we are moving towards SAF at a global level, we need to make sure that countries everywhere are able to play their role and reap the benefits from shifting into this as well. So some thoughts from my side, hopefully a good way to kick off the discussion, and happy to hand it back to you in London.
Okay. Yeah. Thank you very much. It's a clear message that diversifying through SAF is a strategic necessity for supply resilience, cost stability, and economic opportunity. So, as we hear just before we leave, we have one question here. So, we have this question received in the chat box as we are looking at this SAF mandates in 2050 basis net zero scenario, and this kind of optimistic and kind of far away from the steps that current policy trajectory. So do you expect the policy to do a tremendous catch up at global level in the coming years, or shall we work more of like the market conform scenarios?
Sure. So I see more countries starting to be really interested in this. I think they're being cautious at the moment, which is a good thing. We don't want them to rush in to these things without thinking about some of the consequences and the steps that you need to take in order to get there. We're constantly being asked which policy is working and which is not. And it's really too early to tell exactly at the moment because these things are very, very new. Of course, Refuel EU only came in last year. And there are already we're starting to see some slight issues with it. But generally, I would say the Refuel EU idea as a whole is a really good one. We just need to make sure that there is flexibility in the way that you apply these measures, whether that's Refuel EU or in other areas around the world. And if we're seeing some of these things having unintended consequences, being flexible enough to change to meet the requirements of the aviation sector, but also of energy supply more broadly as well. And so that flexibility, transparency in the process is really, really important. And also just making sure that conversations are held. We need to ensure that everybody is on board with this. It's not just government saying, well, we've got a very easy job. We can have one line of legislation and suddenly we've done our job. We can go home now. Actually, this is going to be hard. This is going to be hard for everybody. And so making sure that we have those conversations, making sure that all partners are around the table, and the consequences on the aviation system are well known as well. So flexibility is really key to that. But these things will develop over time. We're not going to see everything happen all at once right now. It will shift as we move towards that 2030 and then 2050 timeframe.
Thank you again, Haldane, and both for the presentation and the answer. And you are more than welcome to stay here and to answer some more questions in the chat in the Q&A box. And since time is limited, I will go through one question here, and we need to move to our second keynote. Let's welcome our second speaker, Denise Pronk. So the head of sustainability at Royal Schiphol Group, where she has served for 17 years. Denise leads the integration of sustainability into Schiphol's long-term strategy and daily operations, and serves as vice chair of the ACI Europe Environmental Strategy Committee and a member of ICAO's Committee on Aviation Environmental Protection. Denise will share the Dutch case, front-runner model combining world-class infrastructure, a pioneering aviation sector, and committed government support, resulting in a joint national roadmap targeting a 2005 level CO2 emissions by 2030. Her keynote is titled Domestic Excellence, the National Roadmap for SAF Industry. Denise, please go ahead.
Thank you so much, Ricky, for the introduction. And good morning, good afternoon, good evening, everyone. Thanks a lot for the invitation and happy to share the Dutch perspective. But first, need to share my screen. All right. I don't see you anymore, so please, Ricky, reach out to me if there's anything in the chat or not clear. So my name is Denise Pronk, Head of Sustainability at Schiphol Group, and happy to share the Dutch perspective and also the role Schiphol Group is playing in decarbonization of aviation. So Netherlands is a small country, and we just listened to the global story and the global challenges of by Haldane, and so that's very gave a very good overview, and it's always a bit almost striking me how much work we need to do, but also how much energy there is in this room, but also in the entire sector to really step up to the challenge to decarbonize aviation. And we in the Netherlands really joined that challenge. And what is special in the Netherlands? Because it's a small country, as you probably are aware of, but we have some characteristics that makes us a front runner in this decarbonization challenge. So where there is a very well and maintained infrastructure in the Netherlands, we have two large ports, Port of Rotterdam and Port of Amsterdam, and they are gates to the Netherlands, but also to Europe, as you can see on the first visual on this right hand of the slide. We have a very strong industry, oil refineries, And also there is an integrated structure available for energy. So it's about road transport, but also pipelines and also transport via water. So the whole combination makes that the infrastructure in the Netherlands is pretty much optimized for SAF and this decarbonization transition. Then it's the Dutch aviation sector. Pretty sure that the Dutch aviation sector is well aware of the climate impact of aviation already for a long time. And so that our airlines, but also ground handlers and airport operators have been pioneering in what are solutions, can we test, can we demonstrate solutions to make our aviation sector more sustainable. So that front runner role really helped. And then there is a third element that's very important in the Dutch situation, is our government. So the government is really a trusted partner in discussions on policies, on legislation. So both on ICAO, so that's more the global level, and also on European and national level. And this Paris Agreement back in 2015 triggered really climate actions in the Netherlands. And the Dutch government organized sector tables for the built environment, for mobility, for the energy sector, but also for the aviation sector. Although aviation is not part of our national decarbonization challenge, because the Netherlands is such a small country that we don't have any commercial domestic flights. So all commercial flights are international qualified in the Netherlands, and so under the ICAO rules and initiatives. However, the Dutch aviation sector, together with the Dutch government, discussed what is possible to achieve, and we came up already back in 2018 on a joint ambition that the emissions of aviation, of commercial aviation, departing from the Netherlands should be back on the 2005 levels by 2030. And we saw that as a first milestone towards net zero by 2050. We are expecting that we are still on track for this challenge. Of course, there were some geopolitical situations now with the Middle East crisis, but also with COVID, that made the whole a level playing field different. But we believe that with, for instance, fleet renewal with SAF and some other solutions, we're on track for this in sector reduction. So it's not with carbon offsets or carbon removals. And then the Dutch government took this initiative one step further, and then they developed a SAF roadmap together, again, with the aviation partners, and to really ramp up the SAF, because, as you are all aware of, sustainable aviation fuels is the only option to reduce the emissions of flying at the moment. And then if we zoom in on the Schiphol Group, on the role of Schiphol Group, so our long-term ambition is to facilitate happy travelers, airlines, and employees in balance with our environment. We really believe that our responsibility goes beyond our own activities. So if we look in the value chain, the biggest environmental impact is, not surprisingly, created by aviation. So back in 2018, we already committed to net zero aviation emissions by 2050. And still there, at the left-hand side, you see that this national CO2 reduction target, that it should be back on the 2005 levels, is part of our corporate strategy, and also that we are working on coalitions of the willing to further reduce the CO2 of aviation in Europe. And then we did a lot of work back in 2018-19 to analyze what role we could play as an airport operator. And we really figured out that it's about 4 topics: aircraft technology, sustainable aviation fuels, operational measures in airspace management, and policy and economic measures. So all the activities we're doing are clustered along those 4 topics. So on this slide, I have some good practices, what we did already in the Netherlands together with the entire Dutch value chain. So important to realize that this first commercial flight on SAF was already 15 years ago, back in 2011. And also work on eSAF had been done, started already with a study in 2017. What's also fascinating, if you look at this overview and this timeline, is that you can see how many initiatives were undertaken during COVID. And I'm also curious if we will reflect back on the current situation with the Middle East. Can we then also see this ramp up of activities to accelerate SAF and to really use this crisis as a way forward to stimulate the decarbonization transition? Also important to mention, I think, is that we already did a study with Transport and Environment NGO in Brussels on and some other parties on the sustainability of SAF, and then especially the sustainability of the feedstocks, because we really believe that the production facilities are there, and that for now, since eSAF is not it's up to scale yet, or still in the R&D phase, I would say, that we also need to look at rotation crops and to see how we can use as much feedstocks as possible without of course competing with the feed and food production. I would and I would like to underline that. Schiphol also organized a SAF incentive that we really co-financed, and we helped the airlines to finance the price gap of SAF back in 2022 till 2024, and we really felt that we should take that step because the European SAF blending mandate kicked in early 2025, as Haldane was already mentioning. I think that was very successful incentive, and we are currently investigating the options, what is possible at the moment to organize a new incentive, but in line with the Refuel EU, because we really believe that SAF is one of the most important measures to reach our climate goals. And let me see, anything else on this slide? Also important to mention that KLM and Shell did the first commercial flight on eSAF also already in 2021. So I really feel that that it's time to boost our activities again, because we've done already so much work, but eSAF really needs a lot of R&D to make it less energy intensive and to also make it cheaper, because of course it's for now it's way too expensive, but the potentials of eSAF is huge, so it's really worth working on the eSAF too. So all those activities, but also the support and the joint ambition with the Dutch government, leads to a very fruitful circumstances in the Netherlands for SAF, resulting in that Schiphol Group is one of the leading SAF hubs in the world at the moment. So if we look at what next, I already mentioned it. We need to accelerate the SAF uptake, working on both national and European level, but in an efficient way. So I already touched upon the feedstocks discussions that are very important, and also we believe that this double-sided auction initiative from the European Commission is very important to work on the SAF supply and demand in Europe. So we very much welcome that initiative. So we also welcome the initiative of the Dutch government to co-invest in to give subsidies for production facilities on SAF, especially SAF. So I think those are very welcome initiatives to go to the next phase in our transition challenge. Also important to let me check. Important to mention that policies are crucial, because in our view, at least in our situation, the infrastructure is ready. So policies and policy certainty is really crucial for investor confidence. So that's our call out to policymakers at national, European, and global level, because that makes that's really the game changer here. And we also aim that say that we first optimize for scale and cost efficiency, and then expand later for a broader coverage globally. Having said that, we also need to be careful that there won't be like a patchwork of all kind of mandates, but also not a patchwork with all kind of incentives. I think it should work together like clockwork, and that's important for us to engage with all kind of stakeholders in the whole value chain, to really work on a joint collaboration and joint initiatives. What's also important to mention is that for us it's important that the competitiveness, at least in the European aviation sector, is ensured, and so we want to maintain the level playing field, and we believe that that it could be possible with working like the polluter pay system. So the EU ETS is something that we really feel that's a great mechanism to introduce that, and but again in a very reasonable and sensitive way, and also initiatives like book and claim are very important to ramp up the SAF use globally. I think to conclude this this presentation on the Netherlands, and especially Schiphol Group, I think it's my main takeout for the audience would be try to work together as much as possible with the aviation sector, but also with fuel suppliers and your national government, because that really can accelerate the work you're doing. And I think that's That's one of the key success factors in the Netherlands. So thank you, and back to you, Ricky, in London.
Thank you very much, Denise. And yeah, just as a quick question from our audience by Hugo Dutchman, asking how are you or the Royal Schiphol Group involved in creating a synergies with the Dutch green hydrogen ecosystem, both production and import, given that green hydrogen is a key for ESAF?
Yeah, a very good question. I didn't touch upon that. Hydrogen and green, especially green hydrogen, I don't think, but that's my personal thinking at this moment, that the Netherlands is the country where green hydrogen will be produced. And looking at our the circumstances, the Netherlands is also not a feedstock country for SAF, for instance. So that's very important to realize. But having said that, that hydrogen is a solution that we're looking at. Also, our ports are very active on hydrogen and the import of hydrogen. And we have co-invested R&D in ESAF a couple of years ago in 2 projects. Unfortunately, those projects have been stopped. But yeah, that's innovation. Of course, sometimes it works, sometimes not. But I really it's a part of the solution, and we are trying to we are part of many partnerships to stimulate that as well, and to get more, to realize, to make ESAF possible.
Yes, Denise, thank you very much, and thank you for the brilliant presentation today. And since time limited, now we might jump to our next keynote and welcome our the speaker. So it is now my pleasure to welcome Mr. Jonathan Council, Group Sustainability Officer at International Airlines Group. Jonathan is responsible for steering the sustainability roadmap of one of the world's largest airline groups, including the negotiation of groundbreaking offtake agreements and integration of SAF into IAG's long-term fuel strategy. His work sits at the critical intersection of demand, commitment, and project finance. His keynote is titled The Buyer's Commitment from Offtake Agreements to FID. Jonathan, over to you.
Thank you, Ricky, and thank you for the introduction. And good day, everybody. Great to be with you. As the introduction says, I'm going to give a perspective from the airline view in terms of the role that we can play in helping stimulate a SAF market. So, but just for those that are not familiar, this is a way of introduction of the International Airlines Group. So we are one of the world's largest airline groups. We have 5 airlines in the group. So you can see BA, Aer Lingus, Iberia, Vueling, and Level. And you can see the scale of our business. I guess it's worth saying that we are one of the world's most profitable airlines, which is very important because this enables us to invest in our sustainability future, which we do very actively, and I'll outline the ways that we specifically do that. And as has been said by previous speakers, this is our version of the chart. We are a hard to abate sector. We need everything. But it's quite clear to us that SAF is going to play a critical role. So as this chart shows, really for 2 reasons. SAF is the only solution that is available today. I saw there's a lot of questions around GGRs and carbon offsets, and I can talk about that later. But they're not able to scale anything like we believe SAF will in the near term, and also there's a lot of uncertainty around access and cost of those. And the second reason is it is the only viable solution, in-sector solution for long-haul aviation, and this represents 70%, up to 70% of our emissions. So for those 2 reasons, we strongly believe that SAF will play a critical role. And it's not just us. here's a view across. These are all the major sort of global roadmaps that are out there, if you like. So Haldane's organisation, ATAG, one of the very early producers of a roadmap, our airline industry association, IATA, ICAO, some of the NGO communities, and then more specifically ourselves, our UK Aviation Consortium, Sustainable Aviation, and also the European Consortium Destination 2050. Now, I won't go to the details. Again, the colours say that we need everything, but green is SAF. So, and you can see pretty much in every scenario there, SAF is playing the primary role in terms of reducing our carbon emissions. So there is good consensus, both at an industry level and a government level, around the role that SAF will play. So I think it's we're beyond whether it's an if solution. It's about when and how quickly can we get there. And then this is specifically IAG's roadmap. We update this every year. So we recognise that new aircraft and operational efficiency will still play a minor role, but here you can see the grey element here is sustainable aviation fuels, and by 2050 we believe 70% of our fuels will be sustainable aviation fuels, reducing our emissions by 42% in 2050. Interesting point to note there is that we recognise that we cannot get to net zero by 2050 through SAF and aircraft engine technology and operation efficiencies alone. So we will have a residual element of emissions to reduce. Currently, those are being addressed through market-based measures and offsets. For instance, through our global carbon offsetting and reduction scheme, CORSIA. We believe that eventually we should migrate to carbon removals as they become available, and by 2050 we would look at all of that residual being provided by carbon removals. But they're very much coming after our priorities are in sector reductions, so those options above that line rather than below the line. And so let me talk about what role can airlines, or should airlines play in helping stimulate and grow the SAF market. And really there's two options here, two priorities. One is long-term committed take-or-pay offtake agreements. And I'll just talk through a few examples that we have progressed at IAG. So Phillips 66. So this was it's a US oil company. They have a facility in the UK on Humber side, the Humber refinery in North Lincolnshire, and they started producing co-processed SAF from early 2022. So that is being supplied today, and they are growing the volume of that SAF supply. Co-processing essentially meaning they can use their existing refining facility and just input a renewable feedstock. In this instance, it's used cooking oil to produce co-processed SAF. So that is we've been supplied that to British Airways since 2022, and we're increasing our supply there. And the life cycle saving emissions over traditional jet fuel are over 80%. So they're a great partner. We've also took our first offtake from the Phillips 56 plant that they have based in the United States. And they are also looking at diversifying their feedstock supply. So looking at feedstocks beyond used cooking oil, particularly 2G feedstocks, recognizing that in the UK, we have a HEFA cap in the mandate, which I'll talk more about later in terms of what that looks like and how we think that should develop. And then, as both Haldane and Denise mentioned, we talk about the three types of SAF. 1G is all the SAF that's available today, so HEFA type SAF, so fats, oils, and greases, UK based. So that's going to be critical for today's supply, and we believe for the next 10 years. But it will be limited in the role it can play in helping us meet our emissions reductions by 2050. Because we believe there's somewhere between 30 and 50 million tons of global SAF supply from the 1G pathways. And as has been pointed out, Haldane pointed out that by 2050 we'll need up to 500 million tons, which is why we support the 2G and the 3G, so second generation, third generation. Second generation, two main pathways there are alcohol to jet. and municipal solid waste, and I'll talk about those in a second. But the third is eSAF, or power to liquids, as they're often called. And the importance of these is the availability. Well, the fact that they're very high, low emissions. They have excellent carbon reduction properties, but an abundant source of raw material as they take CO2 from the atmosphere. You do need green hydrogen, and I recognise that's a very important question, which is why we support, so in the UK, the development of a green hydrogen network, because that'll be key to this. But our view is by 2050, up to 50% of all available SAF will be eSAF. So it's really important that we help stimulate this market. And when I get onto policy, I'll talk about what the EU and UK are doing there and how we think we need to adapt that. But the role we're playing, again, is through these long-term committed take-or-pay offtake agreements. So just two examples of commitments that we signed. One is with a company called 12, based on the west coast of the United States. Now, this was a major departure for us in terms of the way we secure jet fuel. Typically, a fuel contract would be for 12 months. So this was a 14-year contract. So this took quite a long time to progress through our internal governance, not least to determine what are the risks we're taking here. 14 years is a long time, and I guess the biggest risk is how do we know. And it's a committed price, 14 years of the price. How do we know that there won't be another technology that will leapfrog this, that will be superseded with much cheaper jet fuel? I think we were able to show that because this is already quite an advanced pathway, we don't think it'll be superseded, and also because of accessibility to cost-effective renewable power, we think the price is quite competitive. But why do we enter into a 14-year contract? That's what the project needs, because the key word here is bankability. They need to be able to take that contract to the capital markets and raise funds to help get them through the development phase into financial close so they can build the plant. So that was very much a sort of three-way negotiation between ourselves, 12, and the potential financiers. So it's delivering that bankability, and as you can see, quite a significant volume of SAF over that period, the VSAF. Then the second one we signed, this was Infinium, again based in the United States, probably the world's most advanced eSAF company. So they have a plant that is near completion in West Texas. Should be producing eSAF from next year. And again, it was all about that bankability. What can we provide that will enable them to raise further funds to get that plant to completion? So again, this one was a 10-year contract. It was more straightforward to do that 10-year once we'd already gone through the much more challenging process of the 14-year, and we're now in a position where we understand what it will take to get internal approval for these longer-term offtake agreements. But we think this is an absolutely key role that airlines should play in helping stimulate the production of these advanced 2 and 3G SAF facilities. And then one closer to home, so Wastefront. So this is a fascinating pathway. So this takes waste tires. So it's a tire pyrolysis oil. So they take waste tires, which are burnt or used for other purposes, which are being limited for other reasons, but they can be converted into jet fuel. It's known technology in terms of this conversion technology, so it's pretty low risk, and so we believe early opportunity to produce reasonable volumes of 2G SAF around the world. There are tens of millions of tons of waste tires every year. So we think the total potential for this for SAF production globally is somewhere between 10 million and 20 million tons a year, and this is advanced SAF, 2G SAF. So we think a really good opportunity to help meet some of our early 2G SAF requirements. So what we've done here, this was not an offtake agreement. We've actually invested in the company, so they're earlier stage than the ones I've mentioned previously. So we've actually put capital and invested into this project through our IAG Ventures arm. So again, this is the second role we think that airlines should play for some of these earlier stage, more advanced fuel companies. And another example of that is again through our IAG Ventures group. We invested in a company called CCU, so it's a spin-off from Oxford University, and quite an impressive potential power to liquid organization. So again, rather than an offtake, because it's earlier stage, it's actually put some capital into their business to help it scale up. But probably our lead partner is LanzaJet. So I think most people agree, probably the world's leading alcohol to jet company, so 2G SAF company. So we've been partnering with them for almost 10 years. Their initial facility, Freedom Pines, is based in Georgia, the United States. So they were successfully produced the first on-spec commercial scale alcohol to jet fuel late last year. So that's a major milestone. And this year they've completed this successful financial funding round. And we're looking to see continuous production of alcohol to jet this year. So that's very exciting. And then their second plant will be the UK-based plant, 3 times the size of the Freedom Pines facility, using bioethanol produced from waste biomass by our partners Nova Pangaea. And we're looking at to start producing SAF, 2G SAF within the next 3 to 4 years here in the UK. And as you can see, we have some very significant other partners that are involved, recognizing, I think, the importance of this pathway as probably one of the earliest opportunities to achieve scaled up 2G SAF to help meet some of our targets. And also, we recognize this is an industry challenge, so we're always looking at ways to collaborate. We have a very active sustainability group within our One World Alliance. So one of the things we've been looking at is how can we did 2 consolidated purchase agreements on SAF, but with this project initiative, we took it a step further, saying, look, why can't we collectively invest in some of these early stage startup companies to help them get to financial close? So last year we launched this SAF fund, very happy to be working with Breakthrough Energy, who I'd say are probably the world's foremost experts in terms of understanding the global SAF market and what it will take to scale some of these advanced SAFs to produce commercial scale, cost competitively produced SAF. So yeah, we had the first close with 6 airlines, 5 from One World and Singapore Airlines from Star Alliance. That was a $150 million close. We're in the second financial funding round. But this is very much an open fund. It's not just exclusive to airlines. We're looking at other aviation companies, so manufacturers and airports, and also anybody that's got a strong future in the aviation SAF industry. So if there's anybody out there that's got interest in participating in the second round, please do get in touch. And what I've got now is just a very short video that explains better than I can what the fund is about.
I'm excited to announce the launch of the One World BEV Fund. This partnership brings together the One World Alliance, its member airlines, Breakthrough Energy, and others to build an investment fund that will advance innovation to make sustainable aviation fuel affordable.
Our member airlines are united to reduce emissions and invest in technologies that can improve speed to market across the globe.
Big picture, the vast majority of the planet hasn't been on an airplane. Around the world today, we see a rise in prosperity that will inevitably lead to much greater aviation, transportation. We have to find ways to make hydrocarbons that are suited to purpose for transportation in a way that doesn't produce emissions. This fund is built to address that incredible challenge.
Our goal is to leapfrog current SAF technologies. We like Breakthrough Energy as a partner because they bring deep expertise in clean energy investing. Our customers want this, and it's just good business.
This partnership is about leading together to build a future where flying is safe, reliable, and more sustainable.
SAF technologies are very expensive to produce, so there is a gap in the investment needed to bring them to market. This fund is designed to help close that gap. Asia will continue to play a critical role in the future SAF ecosystem, both as a key producer and with growing demand.
A stable supply of next-generation SAF will make a significant contribution to decarbonizing the airline industry.
Breakthrough Energy Ventures has the technical depth to evaluate potential pathways to production that have both a cost and a scale entitlement necessary to be successful in the marketplace.
The challenge we're taking on here is one of the most difficult in the whole climate space. But I know we're going to find some incredible ideas, great entrepreneurs, and achieve our sustainable aviation goal.
So yeah, we're very excited about that initiative, and as I say, if there's anybody that is interested in participating in the next round, just please do get in touch. And then before I close, I just wanted to quickly talk about policy. As mentioned earlier, this is absolutely key in enabling scale up of SAF. So this is explains the slightly different structures of the UK and the EU SAF mandates. And it's all about the 2 and the 3G. So you can see in the UK, they're very much focused on the 2G, and what they've done is they've introduced a HEFA cap. So limiting how much of your mandated target can be met through 1G SAF. So we support the principle of needing to incentivize early investment in 2 and 3G capacity. The one thing that we are working with governments is to make sure that those sub targets and the available incentives align with potential supply, because if there isn't supply, then there are very significant buyout penalties. So we're in active conversations at the UK level and at the EU level, where they've taken there's less incentives for 2G SAF, but very much focused on 3G SAF, the power to liquids. So which starts from 20, that 1.2% of the 6% mandate is 3G SAF. It doesn't sound a lot, but that's 600,000 tons per year. Today, there is virtually no power to liquid SAF. So one of the things we're looking to do is align incentives to ensure we can meet that supply, but also very importantly, avoid this buyout risk for carriers. But overall, we support the principle that these policies have got to incentivize the earlier scale up of these more advanced SAFs. So that's me. Thank you very much. And look forward to the ongoing discussion.
Thank you, Jonathan, and for the perfect presentation. And unfortunately, since we are running out of time, we may not have the time for the Q&A session, but there's still, you feel free to answer all these questions in the Q&A box, and we might move to our executive panel. So, yeah, thank you very much. And next is our executive panel for the final segment of today's program, our executive panel. This is with the themes of policy, national road mapping, and biocommitment covered into a single question. How do we drive capital resilience and accelerate 2030 readiness across the SAF value chain? So it is my pleasure to introduce the panel moderator and the distinguished panelists joining us. Our moderator is Mr. Duncan McCott, Chief Executive of Sustainable Aviation. Duncan has been at the forefront of the UK's collaborative efforts to decarbonize aviation, bringing together airlines, airports, manufacturers, and fuel producers. He is joined by 3 panelists: Mr. Robert Boyd, Chief of the FinInvest Club at the International Civil Aviation Organization; Mr. Jim Woodger, Managing Director, EMEA and Americas at LanzaTech, and Ms. Jackie Brew, Senior Manager of Aviation at the Sustainable Aviation Buyers Alliance. This panel will explore how we align finance, technology, and demand commitment to build a resilient investment case for SAF. Duncan, I now hand over to you and the panel.
Thank you very much, Ruki. Good morning or afternoon or evening, everyone. It's great to be here, and thank you very much to the panelists for joining. I think the keynotes already have brought out a few of the key insights of this. Haldane talked about SAF and its sovereign case. We could talk a little bit about the sort of public attitudes to SAF and the way we describe SAF, if interesting, in a little while. Denise talked about the importance of partnership between industry and government to deliver on a significant scale in the Netherlands. And Jonathan talked about the key importance of off-takers and their ability both to signal demand and to invest in plants. And IAG is a real leader in that field, it seems to me. So we can talk through some of those issues further with the panel. I would say the various mandates coming into place around the world create significant demand. There is significant announced supply, but much less actual supply produced. So I think the things to focus on today are how can government and industry de-risk those projects, those future projects, to get them to FID? What demand signals are there and what more is needed? And how can industry scale those technologies to close the gap? And it's great to have the three panelists. So Robert, as Ruki mentioned, is the chief of the Finvest hub at ICAO. That is an initiative that connects public policy frameworks with private capital to support SAF project development and de-risking. So he is an expert on how public instruments can unlock private investment, particularly for SAF. So we look forward to hearing from Robert. Jackie is Senior Manager of Aviation at SABA, the Sustainable Aviation Buyers Alliance. As such, Jackie focuses on the demand side, trying to engage corporate buyers to move from broad sustainability pledges to what is needed in terms of binding offtake agreements. And as such, her work directly shapes the demand signals that investors and producers will need to underpin capacity. And Jim is the Managing Director for EMEA and the Americas of LanzaTech, leading a team to deliver commercial scale projects based on LanzaTech's gas fermentation and LanzaJet's alcohol to jet technologies. I think the three plants, and Jim, you may correct me if I'm wrong, the primary ones are one that are being developed is one in Humberside, converting waste gases to SAF, a project in Norway which will turn waste industrial gases to ethanol and then presumably to SAF, and an alcohol to jet plant in Belgium. So Jim is at the sort of sharp end of developing the projects. So if we'll have some time for questions at the end, but if you would like to post some in the chat as we go along, I will try to pick them up as we go. But if I could turn to you first, Robert, how do you see the SAF situation and development of the market, and how do you see the Finvest hub contributing to closing the supply gap?
Yeah, thank you very much, Duncan, for the introduction, and good day to all. Yeah, I think it's a great question to start with. As you've described it to me is very accurate. Particularly when you're talking about significant announcements or announced capacity, and obviously there's a difference between what we're actually seeing as realised production today. We would expect there's a lag in these projects in this development cycle. However, I think the real question we're trying to grapple with here is what's the conversion rate between an announcement and it translating into a finished facility, because that's actually what we're going to need at the end of the day. And it's interesting from an ICAO perspective. For a bit of background there, we think a little less about, I focus a little bit less on the regional policy frameworks. Like we talked already a little bit about the likes of Refuel EU in the UK mandate structure. Whilst they're very important in the global context, ICAO will take the global perspective on this. And the global goal, which is not particularly different to Refuel and the UK, but the global goal was set in 2023 at the Conference on Aviation and Alternative Fuel, and that's a 5% carbon intensity reduction, which is slightly different to volumetric mandates. So 5% carbon intensity reduction by 2030. So that is a yardstick we are definitely really focused on in terms of is the production and the announcements, but also realised production on track to meet that. And Finvest, just briefly on well, what's Finvest's role in all of this? So I think the recognition, certainly by governments, is that this can't be just a progress point from the developed world. And we've seen some of the references. Jonathan just gave a great set of them. Most of those projects have been more advanced in some of the developed parts of the world, but it's incredibly important for the principle for ICAO that no country is left behind here, because almost every country can ultimately contribute to, in one way or the other, to the production of sustainable aviation fuel. So Finvest, whilst it's not exclusive to developing regions, we do have a bias in our portfolio at the moment where we've currently got 27 projects, which we are helping understand what part of the business cycle they're at, or the project development cycle, and how we can help them essentially de-risk their projects such that they can be matched with the right type of capital. And that could be in the earlier stage where they're looking for, some of that catalytic sort of investment, or towards the mature end where they need the significant sums, often debt capital, to go and actually construct a facility. So Finvest is the program that's in action doing some of that work.
Great.
Thanks.
Thank you, Robert. I suppose just to pick up on the principle of no country left behind, what do you see as the geographic spread of those projects that you're looking at?
Oh, well, at the moment, it's actually well spread. We have projects, at least 4 projects in each of the sort of the 5 regions we break this down into. Our sample size is relatively small still. I think at 27, it's not tiny, but it's I think that'll be more tested once we see our repository grow to sort of 50, 60, 70. But at the moment, there's a good balance. To me, it's not unexpected that some of the more mature projects currently sit in developed parts of the world, because there has been a slightly inconsistent progress. If we rewind over the past 20 years, this wasn't a global topic 20 years ago. It was being worked on in different patches and parts of the world, but now it has all come together. There's a collective understanding. There are global agreements. So we will see this even out, in my view, as we move forward.
Great. Thank you. And turning now to Jackie, how do you see the sort of evolution of the SAF industry? How do you see the sort of role of demand signals at the moment, and what is SABA doing, and how can we help close that demand gap?
Mm-hmm. Well, we view demand signals as very important for scaling the market, both for supporting existing SAF production facilities as well as bringing new ones to FID. For existing SAF production facilities, if they are not selling close to 100% of their planned production capacity, then it's difficult for additional facilities to justify reaching FID if all of the current facilities aren't selling everything they're producing. So that's why we think it's very important for customers, if they aren't able to buy longer term future commitments, investing today can still be a stepping stone to be able to get new facilities online. However, we also know that for new facilities to get online, they need to reach final investment decision. And we have done interviews with different producers, and many of them have shared that in order to reach FID, they will need to sign offtake agreements for 60, 75, sometimes 90% of their planned production output. Demand signals play a huge role in being able to help them get to FID. One thing that we have been doing that's of most relevance to this discussion is a recent procurement that we ran called the Next Generation Procurement, that was targeting facilities that have not yet reached FID but are aiming startup by 2030. And we launched that last year. We just announced Infinium as the winner of that procurement for a new facility they'll be producing in the US, aiming to start up by 2029. And we knew that if we want more advanced production pathways by 2030, the investment and offtakes need to be taking place this year and next year due to the often 3-year gap between reaching FID and commercial output.
Yeah, and I see Jim nodding along knowingly and with great sort of empathy as you talk about the need for long-term offtake agreements. Can you comment on whether and how the existing or the ongoing situation in the Gulf is affecting airlines' willingness to take or appetite to take offtake agreements?
Yes, and I'll also be interested to hear the other views, because I think it can really depend on the situation. An initial reaction that we've heard from a lot of people that we're having discussions with is, and actually I'll back up for a second to say a lot of the way that SABA does offtake agreements is through the book and claim model, where you decouple the physical attributes from the physical SAF and then sell them separately as SAF certificates. And often the SAF certificates are sold in tons of CO2 abated, which then looks at the spread, or one pricing structure is looking at the spread between fossil jet fuel and SAF. And so an initial reaction that a lot of people have is, oh, well, if the price of jet fuel is going up, that must mean the spread between SAF and fossil jet fuel is lower, so SAF prices are going down. And again, the answer is it depends on the pricing structure. We've also seen ones where it's just indexed to the price of fossil jet, so even if the SAF production isn't having any impact by what's going on in Iran, it could still cause it to go up. Another near-term effect that we're aware of is that if airlines have to increase the amount they're spending on fossil jet fuel, that might mean that they have less budget available for SAF. However, long-term, we're hopeful that, while it's an unfortunate situation, it is a reminder of the importance of energy security and independence, which highlights another benefit that SAF has in addition to emissions reductions, because due to the variety of SAF production pathways and feedstocks, many regions would have the potential to do their own SAF production, which has an added energy security benefit.
Yeah, great. Thank you. And that, I think, very eloquently answers one of the questions that was in the chat and the Q&A function. So just a reminder to everyone, if you would like some questions answered as we go along, please put them in the Q&A box. Jim, could I turn to you? You're at the sharp end of all of this. Trying to get projects off the ground, and I think everybody here wishes you all the very best with that. How do you see the situation, and how is LanzaJet dealing with and juggling these various issues that you're facing? Sorry, LanzaTech.
Right. Thanks, Duncan, and hello to everyone. Great to be here. I think from what we've heard and seen so far this morning, and indeed what the other panelists have mentioned, the good news is the demand is there, right? So in that sense, my job as trying to create supply should be an easy one on the face of it. The demand signals are there from policy, the airline goals, the consumer demand, etc., the decarbonisation of aviation. That being said, of course, this is in some cases fairly new to the world technology, new projects being built, and so first of a kind is always much harder than people think. I think is something to bear in mind. From our side, we've been developing over the last 20 years, two technologies, as you mentioned already, where we can make second generation and indeed third generation SAF, taking waste gases and solid waste even as well through our gas fermentation process to ethanol, and then ethanol to jet fuel via the alcohol to jet process. So, with that demand signal for SAF, it's creating that pull through demand as well for the ethanol, and therefore for projects that are going to take waste materials through to that ethanol. The challenge, of course, comes in finding good bankable projects, and that starts obviously from our side. We've made our technology selection. I'm all for all other technologies, Fischer-Tropsch, methanol, PTLs, etc. As you see, we need all of the above to get us to where we need to be. But I think the good news from our perspective is that we've been doing this for the last 10 years or so, developing actual projects, and so we've now got, as you said, a portfolio of quite good bankable projects set up. We've been through FEED packages, front-end engineering design, site selection, planning and permitting, securing our feedstocks, which we have to do for 10 plus years. And obviously the subject of conversation here is how to get those off-takes in place in order to achieve a final investment decision, which for Project Dragon in the UK and indeed Project Flight, as you mentioned, in Belgium, we're very close to doing. I would say the challenge, which perhaps we can come to talk about, is not so much the volume. Volume is there. The challenge, of course, comes in price. What everyone's trying to do is find an overlap between the price I can afford to sell for to get a decent IRR or return on my investment and secure financing, ideally debt financing as well as equity. And of course, the airlines and the fuel distributors looking at the buyout prices or fines they might have to pay and how far below that they can get with that 10-year view in mind. And I think one of the big challenges we see is, if I can use the phrase, everyone is playing chicken with each other. No one wants to pay the fines or the buyout prices in the future, but no one wants to be paying a cent more for their SAF versus their competitor. A very understandable position. And so the challenge is finding that overlap in terms of investability, but also in willingness to buy. But no one wants to be left without SAF at the end of the day. So good news is we've got projects coming to FID. We have secured long-term offtakes for some of those already and looking to close out more. Price seems to be the challenge, linked, of course, to the life cycle assessment. The better you can do there, particularly in the UK, the better you can be looking at pricing. So, yeah, it's an interesting current environment, I would say.
Thanks, Jim. And I haven't heard it described in exactly the terms game of chicken, but I've heard the sort of circumstance that you described before. How do you see that playing out? What's often a game of chicken ends with a catalyst forces the solution. How do you see this coming to a head?
I think there's a number of ways it comes to a head. Firstly, if I look at the UK, where I'm based, the things like the revenue certainty mechanism from government is supposed to come into play in the 1st of January next year. And that is going to provide a backstop for investment in SAF plants. I think a lot of the airlines and fuel distributors in the UK are sort of holding back, waiting for that to happen. Their thought process being that if that's a competitive process where projects are bidding for a strike price for their SAF, they'll be forced to keep that strike price as low as possible, i.e. look for a reasonable IRR return rather than a fantastic one. And therefore the airlines will be able to know they're not being outplayed by anyone else. The problem comes, of course, is when RCM is awarded to various projects, everyone is going to try and sign up for that SAF at the same time, which creates a competitive situation. Similarly, I would say in Europe, obviously there's no sub-target for advanced SAF. In Europe, it's lumped in with HEFA. And so as we see those HEFA feedstocks become less available, people are saying 2030, 2031, 32, you'll start to see that demand and that urgency to start to enter into people's minds. So I think last year was much about people securing their HEFA supplies going forward. Now everyone is definitely talking about their advanced SAF and PTL SAF supplies going forward, and the fact we've got offtakes from a number of parties already tells us that no, we're getting there. So, but I think some policy things, some feedstock things will start to change it as a sense of urgency gets into people's minds.
Great, thank you. We've talked a little bit about the situation in Iran and its impact. I'd like just to broaden that out to the general political environment for SAF. We did a little bit of polling a while back on how the public view sustainable aviation fuel, and they were rather allergic to the word sustainable in there. If it's described as next generation or less polluting fuel, the public sort of accepted it. If you have the word sustainable in there or environmental or green, it's seen as probably going to cost the passenger more, so they're less supportive of it. And I think that shows a general, well, weariness might not be quite the right term, but certainly less acceptance of sustainability as a concept amongst voters and net zero as a concept amongst voters, in part driven by political changes, certainly in the UK with reform and in the US with President Trump. So I wondered how you were all seeing that. How do you see the changing political mood? What, if anything, could we adjust? Should we do about that? I mean, I've heard some colleagues say very clearly, you know, the politics may change, but the science doesn't. So we must plough on, and obviously that's right. But how do you all see that?
I guess I'll kick it off since I'm already unmuted. So I think I tend to agree with you that from a political perspective, things are quite cyclical, and flavour of the month this year will change next year or in the coming years. So I'm firmly of the opinion we plough on. I think I do recognise your comment around general weariness around sustainable and driven by two things. One, you're right. Is it going to cost me more to be green? We look at energy prices in particular. Things are greener but more expensive, and there's a challenge there. But also, I think everyone's very wary of greenwashing, and I think therefore, being really focused on your messaging around why we're doing things and being really clear on the independent analysis around your life cycle analysis is critical. The good news is the UK SAF mandate rewards you for being more green and lower CI carbon intensity of your SAF. So that's helpful. But generally seeing the market is challenging from the headwinds that you mentioned, particularly in the States. Venture capital in this space in particular has dried up a lot for biotechnology and sustainability. But I think there's good arguments. I think Jackie mentioned energy security. Great argument as to why we should be doing things as well, right? And obviously with tariffs ebbing and flowing as well, having homegrown production, driving the economy and bringing jobs and industry back to each country are also good reasons for doing what we're doing. So there's swings and roundabouts, yeah.
And I'm happy to jump in with what we've seen from the corporate side. So I'd say for companies that were already investing in SAF certificates before the political shift in the US, we haven't observed any pullback there. In some cases, they're maybe a little quieter than they were before, depending on, what other political concerns they may have. Where we have seen a slowdown, but not a total drop off, is new companies starting their pilot SAF procurements in the face of the, political uncertainty or headwinds. Although I would say that's leveled out a little bit. In early 2025, when the Trump administration came into office, we were pretty worried about, and I think a lot of others were as well, about the uncertainty with hydrogen tax credits, which are, important for the price of e-fuels, as well as the clean fuel production credit. Once the big, beautiful bill came out and did not completely eliminate those, it did modify them in some way. That then eliminated some of the uncertainty. So we've seen some projects be able to move forward, even with that shift from the Biden administration.
Yeah, great. Great, thanks. And how about you, Robert?
Yeah, happy to add a little more global perspective as well. It's very interesting, the observations around the consumer and some of the surveys and so on, because I think on the one hand, that actually says that there's more awareness today than just on the term sustainable aviation fuel and the decarbonisation of aviation than you would have got if you surveyed the general public 10 years ago. There would have been a lot of people scratching their heads. So perhaps on the one hand, I can take that as a positive. If I zoom out, I view it more as a patchwork, to be honest. Whilst we can clearly recognise there's been dampening of sentiment driven by sometimes political narratives in certain parts of the world, but it is not across the world. There is, I would say, much greater understanding and enthusiasm from a political perspective in many regions. I think certainly Asia, Southeast Asia, Latin America, and a lot of areas through Africa, seeing that particularly around the willingness to investigate policy approaches. There's been some policy activity in Latin America and Asia, but it's really new. It's newer compared to the policy frameworks that are sort of in place and starting to be implemented, say in Europe and the UK, and the US has had a policy for a long time as well. So in that regard, I see that as actually, enough positives to balance out, some of the dampening of sentiment that you might have sort of mentioned there. And I think the sort of the question you might say that, well, why is that? And I think some of the reasons are slightly different in perhaps some of these parts of the world I'm talking about. And it's at the people level, it's a recognition that this can be economically good for our country. And there's a recognition around often feedstock potential. Sometimes it's waste as well. That's, creates local externalities that can be converted into something productive. So there's greater awareness on, how do we think about exploiting or using the opportunity as a country or as a local set of stakeholders to contribute to a bigger picture objective for the good.
Interesting. Yeah. Naturally, aviation is an international business, and climate change is a global problem. So it is one that the whole world needs to get contributing to, and it may well be the case that many of the feedstocks and SAF production is best located not in Europe or the UK or even the US. So it's interesting to hear that. Just moving on to feedstocks and the sort of the dependencies on other projects. How do you all see those issues panning out? Do you see issues with accessing availability of feedstocks or carbon capture and storage that may be required for advanced SAF? How do you see those issues or risks being managed?
From our side, I think we don't see an issue in terms of feedstock availability. As I mentioned, Duncan, we have a technology that's very flexible on feedstocks. We can take waste gases from a steel mill, waste gases that were being vented from a refinery. We can take biomass that's gasified. We can take municipal solid waste, tires, anything that can be turned into a gas containing CO2, hydrogen, and CO from our perspective is a feedstock for our bacteria to turn into ethanol. And once we've got the ethanol, we can move that to SAF via alcohol to jet. So we're in a enviable position that there's plenty of feedstock out there that can meet all of the SAF demands out to 2050 and beyond with those feedstocks. So for us, it's about finding those feedstocks concentrated in the right place to where we can do a project to convert that feedstock into ethanol. To that end, and maybe picking up on what Robert was saying around some of these other countries, they're not traditional oil producing countries, but they have now a resource, an opportunity with the feedstocks they have available. We've got lots of projects that we're looking at across Africa in particular, based upon local biomass and municipal solid waste, etc. where they can then convert that locally, with a gas fermentation plant to ethanol. What we do see then is a bit more of a hub and spoke situation where you may want to bring ethanol from a variety of gas fermentation plants to a central large alcohol to jet unit, which is better suited in an oil refinery type environment and close to the blending with fossil kerosene and the distribution to the airports. So that hub and spoke model is certainly playing out for sure. But given we have 6 commercial plants operating today with gas fermentation, and as Jonathan mentioned earlier, the Landsjet facility, first commercial plant in Georgia for alcohol to jet. For us, it's now just technology is proven. It's about deploying good bankable projects and finding those feedstocks. So, yeah, it's still a challenge, but a nice problem to have, I would say.
Interesting.
I'm happy to quickly chime in on that as well, Duncan. I very much concur with Jim's view on that. And just from the repository we're working with, the 27, every single one of them has come with a strong feedstock story. That's not the part of the business case that's lacking. There's always work still to do. Jim was sort of referring to, optimizing logistics, working on the, verifying the LCA, all this. However, access to the right feedstock for the type of project is never the problem, which is a good story. As Jim says, there is enough feedstock that can be produced sustainably on planet Earth to satisfy our huge 2050 number that Haldane mentioned at the very start. But it's the rest of the project economics that makes the challenge ahead a difficult one.
So that's interesting to hear. Thanks. So on that, do you see, or the projects that you are looking at, are you seeing issues around planning consent, around connections, around connecting to the distribution network? What are you seeing as the sort of reliance on other projects? What are the project risks that you are most concerned about?
It's really hard to identify one. Unfortunately, there's a list of things. It's I don't want to come across in a negative way, but it is literally almost every aspect of a project, depending where it is in its maturity, particularly if it's relatively early on, will have opportunities to reduce risk, because it's naturally, when you don't have firm agreements, you'll have understandings. All right, well, we need feedstock, we need technology, we then need reliable offtake, we need logistics in there, we need to understand our political environment. You can get insurance for a lot of this. However, you think about it from a personal perspective, every single bit of insurance you're paying out in your own lifestyle reduces your ability to use that money for something else. And in a way, it's the same when you're trying to build a financial model at the very start of a project. And it was referenced, I think Jim made this point of financial institutions and the SAF companies are looking for an internal rate of return or a net present value for the project that's positive relative to what we call a discount rate, or a measure of risk that investors or debt capital providers will ascribe to that, or that's the return the project needs to get. So the lower that is, the greater the chance the project will be what we would call net present value positive. If you put a very high discount rate, meaning there's lots of risk still in the project, many of these are not going to satisfy those financial hurdles there. So the challenge and goal for every single one is looking at every single element of risk and how could it be reduced somehow. And it's sequential. You just gradually work on absolutely everything to the point where you have a successful project. But you need partners, you need governments to recognize that they have a role to play here. Policy is also a de-risking tool. That reliability of the offtake is critical. I mean, that's your revenue coming in. That is in such a variation between, you'll hear many projects say we're talking to a buyer, we have a letter of intent, we have a memorandum of cooperation, or as Jonathan Council referred to, or one of those, I think it was a take or pay, a binding take or pay contract. So then suddenly the financial institutions looking at the credit worthiness of the entity of IAG, not of sort of some handshake. It's a real thing. That's something that is bankable. And this is what starts to reduce your project risk. So sorry, long-winded answer there, but it's just such a myriad of things to work on risk reduction.
Yeah, and there's obviously a significant difference between a binding take and pay agreement and a sort of letter of intent or something similar. So over to you for that one, Jackie. I think
and maybe Duncan, just to reflect on what Robert said there. I think that you sort of posed the question at the start. We've got this big demand signal out there. We've had lots of projects announced, but they haven't got to FID in the pace that we wanted them to. And I was just reflecting on your question and Robert's response there. I think we obviously talk about the fact that lots of these technologies have been in development for the last few years, and this is first of a kind. But I think also, this is a personal reflection here, there's been an awful lot of learnings from everyone across the value chain, not least of which the project developers, because we haven't had these technologies, I'm generalizing here, being developed by very large companies with a lot of capital behind them and a lot of knowledge on how to develop projects. And with all due respect to the oil companies of the world, when they do a project, they also have a very sequential process that takes time and is de-risked along the way, etc. So we've had and I also don't want to reflect that it's a lot of cowboys who've been developing SAF projects either, but from personal experience, we've learned a huge amount, right? You start with a feasibility study. And when I joined Landertech, 5 years ago, in week one, our project was going to be $100 million. It was going to take 2 years to build, and our costs were going to be competitive with fossil kerosene, because you've got a feasibility study that says that. And then when you start to do some engineering and you develop it, of course, your capex goes up. You find a site, but your site's not perfect. You've got to build more things, and you start to learn the hard way that actually it's a lot more expensive than you thought to deploy these projects, and a lot more intricacies around planning and permitting and feedstock supply and so forth. And that's where I think we're seeing a lot of these announced projects run into very similar situation. Again, I'm generalizing here, where they realize that that site on paper started out looking good, but actually turns out it's double the capex because you've got to build everything. And so we're seeing a lot of projects sort of retreat a little bit, reevaluate, think again about how they can make a project bankable as they get more and more knowledge through the engineering and development process. And so I think there's been a bit of a hiatus, as you've alluded to, in projects getting to FID. But I'd like to think that because of that learning collectively, the projects that do get to FID are going to be much more bankable and much more reliable about actually being executable than just having 300 projects globally fail in that sense. Maybe I'm right, maybe I'm wrong, maybe it's a pipe dream. We'll see.
Yeah, I mean, it seems to me for the aviation industry as a whole, there's a lot riding on the success of a few plants early on, because it also seems to me that once the technologies are proven at commercial scale, it becomes a much more investable proposition. But these first of a kind projects are by their nature difficult to get up and running, because, as you say, you do a lot of learning as you go along. So we're running relatively short on time. I suppose I would like to ask each of you to sort of get your crystal balls out and say, how do you see this market in 5 years' time? Do you see sufficient supply on stream by then to meet existing mandates, or do you see some ongoing shortages?
Well, happy to start. And I think 5 years is an interesting timeline, because that's, right around an inflection point with a lot of projections. So a lot of, reports from like the reputable groups that are projecting SAF supply, at least that I've read, are anticipating an oversupply up until 2030, and then a shortage of supply after 2030, with one cause of that being that 2030 is a year when a lot of global mandates either come into effect or ramp up. And then there are also a lot of corporations that have specific targets by 2030. So I guess, then moving on to next steps, that because of the 3-year timeline between FID and production, if we do want to be close to meeting those 2030 goals and not having a shortage, it's really going to depend on how much progress can be made in the next year and a half.
Yeah. And sorry to put you on the spot again. What do you see? Are you optimistic about the development that's likely to happen over the next year and a half, or because I totally agree with you that there's an inflection point in demand. I suppose, is there an equivalent inflection point in supply, which we can start to deliver over the next couple of years?
I guess where I'm most worried, and all of us working in the climate space, you have to be optimistic. So I would never want to say I'm not, but I'd say I'm most worried for maybe some of the more advanced pathways, like there's an e-fuel sub mandate in Europe. And so I know that is pretty behind. And so it's going to require everyone to make some quick changes, incentives, sign offtake agreements to be anywhere close to being able to reach that within the next year and a half. And so it's going to require a lot of collaboration to kind of get over that chicken game that Jim mentioned, to get everyone in the value chain to work together.
Yeah. Robert, how do you see things?
Well, I think one of the objective of these policies is to set signals, and particularly at the global level, if I think of the 5% carbon intensity reduction. So yes, there will be, and there should be, measuring against these signals. We've got a reasonably good picture already of what will expected supply look like, and that's partly because of the lead time that exists to develop these projects. I mean, there could be a little bit of additional coming on that we don't necessarily know about right on perhaps 2030, but it's not going to be drastically off. So I think, 5% globally is an ambitious number for sure, but I think the signal has been effective in the amount of additional activity it's stimulated. I would probably measure 2030 more by what does the pipeline look like at that point. What's the quality of projects coming through? And also, I would hope at that point there is several success case studies to look at. I think Jim made a great point just before of learning by doing. That's exactly what's happening. I'm seeing that constantly in the work I'm doing, is that just because a pre-feed or a feed study on paper, or even going further back to things like we do through our assistance capacity building and training initiatives, some 35 great studies underway at the feasibility level, and they will all show generally a positive story. But it's then the case studies to look at and learn from for how do you convert those positive stories into ultimately bankable projects built and producing fuel. And I think we are really getting a much better understanding of doing that, and doing that in a good time frame now. So 2030 will be, 5 kilometers into the marathon, if we use that analogy. It won't define the end time, but it's a useful waypoint to check our progress against.
Yeah, I think 5Ks into a marathon, I'd be utterly exhausted. So hopefully others will have more staying power. Jim, how do you see it? Last word to you.
Thanks. I think 2030 is looking a bit challenging. I echo what Jackie said about the PTL targets are under stress right now. I can see that. I think we've got a fair chance of hitting some of the advanced SAF opportunities, but it takes 3 years to build a plant, and we're ready with our plants to approach FID now, but some of the policy isn't. And so, if we have to wait around for that policy, like revenue certainty mechanism, that is just holding things back, which is unfortunate. So 2030 is going to be challenging, I think, to get a lot of these plants up and running to full capacity by that time frame. But I also am the eternal optimist in this space, having been in SAF for, dare I say it, 20 years. Once you get that first plant up and running, we have a pipeline of 50 projects behind in waiting to go forward. The analogy is everyone wants to be first to be second, right? So as soon as those first of a kind plants are up and running, we can see positive cash flows in particular. I think we'll definitely be off to the races. And that's not to say everyone's waiting 3 years for that to happen. They're all developing in the background at their own pace. But yeah, once we get these first few up and running, which are the hardest to do, I think we'll literally have liftoff, if I can use that analogy in this context.
Great. Well, thank you. I think everyone on this call, certainly everyone on this panel, and I think everyone on the call is working hard to turn the ambition into reality. And as I said at the start, wish you all great success in doing so. With that, Ruki, I'll hand it back to you.
Thank you, Duncan, and to each our panelists for such a candid and practical exchange. And thank you once again to Howden Dodd, Dennis Prock, and Jonathan Council for sharing your expertise with us. I also want to thank our audience for your thoughtful questions and engagement throughout today's webinar. And so today's message is clear. The SAF transition has moved from ambition to execution. It needs policy certainty that unlocks investment, national roadmap that connects assets to action, and demand commitments that make project bankable. This is exactly the conversation that Impact Series and the SAF Global Summit 2026 were designed to advance. Our SAF Global Summit 2026 will take place on 22 and 23 of September 2026 in London. So before we close, there's a quick note that this recording of today's session, together with a summary of key takeaways, will be made available on 14th May, 1 week from now. If you have any questions in the meantime, please feel free to reach out to Ricky at leadersassociates.com. And on behalf of Leaders Associates, thank you once again for joining us. We hope to see you in London this September. And thank you and goodbye.